Hi, everyone. Welcome back to Young Entrepreneurs of the World 2023, our conference. We continue here. Today, we've had a really interesting day of our virtual gathering of aspiring entrepreneurs. We've had a number of people and experts passing along their wisdom and their business advice, and we're happy to invite now Fred Ehle. He's the VP of Marketing Solutions Group at Rose Ryan, to talk about raising capital and market size and value proposition. Fred joins us today from the Bay Area. So Fred, welcome.
Thank you, Glenn. Nice to be here, and thank you for having me.
Look forward to your remarks. Let me hand it off over to you.
All right, terrific. So thank you, Glenn. I appreciate the introduction, and what I want to talk today about is what you really need to do before you go to your capital raise, and more importantly, the amount of market discipline and quantification around your value proposition needed that we see so often being missed with young entrepreneurs. Let me tell you very quickly a little bit about myself. I am a marketer by trade, a B2C marketer by trade. I started my career in a number of major ad agencies in Chicago, serving a number of consumer packaged goods businesses, both domestically and globally. I've been pivoted in the last 10 years of my career on the corporate marketing leadership side, starting with Pulte Homes, which is the largest publicly traded builder in the country, as brand management, then became the chief customer officer at McDonald's US. And then I led marketing at both Redbox and then most recently at Jockey International, leading product marketing and strategy, innovation, and consumer insights. And now I'm a member of Rose Ryan. Rose Ryan is a division of Zerg Partners, a private equity funded global talent advisory firm specializing in fractional and interim, executive search, and HR consulting. We are the interim and fractional on-demand leadership and consulting arm of ZRG around marketing, finance, accounting, and we've got extremely broad and deep knowledge, but in particular, given our location in Silicon Valley, around high-tech software, life sciences. We work with startups to Fortune 500 companies and companies going through all stages of growth and change, from startup to IPOs and beyond. We have 120 consultants. We've been around since 1993. We've served over 1,500 clients. So with the depth and breadth of the firm background, we've seen all sorts of early stage companies and the challenges they face. And unfortunately for the young entrepreneurs out there, this is the chart that no one wants to see, but is the one everyone should see. According to Failery, 90% of all startups fail. And there's two reasons why. Number one is misreading market demand, and in particular in misreading the market demand, it is overestimating market demand for their product and service. Second is they run out of capital. And so the question then becomes, how do you mitigate that risk so that you're not one of the 90% that fail, you're one of the 10% that actually succeed? And the best way to mitigate that risk is knowing not just the market size, but your market potential. So you can look at the market in terms of the entirety of the market, but you may only participate in a portion of that market, and you may only capture a share of that portion of the market. So the market potential is actually much more nuanced than just the overall size of any particular market. And once you know that, then you'll know how much capital you're going to need to succeed to achieve that share, or at least to achieve profitability within that. And in doing so, you've just mitigated the two biggest risk factors in failure. Now, the reason you'd want to understand that before capital raise is it's highly likely that your capital partners or potential investors are going to ask you this in the raise meeting, in particular in this environment where access to capital has suddenly become much tougher given the interest rate environment. So how do I do this? it's critical to do your homework. And a lot of what I'll be talking about is going to require primary market research, which sounds daunting and scary and expensive and time consuming. But the fact of the matter is primary market research has never been more attainable, affordable, or immediate as it is today, either for B2C or B2B companies. It's regardless. And you really need to understand what your total available market. So some of you have probably heard of TAM and SAM. That's what I'm talking about, is what is the total available market, within your service offering? And then besides the segments within which you could compete within that market. And then the last is quantifying the interest in your product or service. And this is where I see a lot of companies fail. They might understand the total market, they may understand the segments, but very few go as far as to say, we really want to quantify the interest in our product or service, what people are willing to pay for it, what the purchase cycle is, what the barriers to purchase are, et cetera, which I'll talk about in a moment. Now, the TAMs for most verticals are readily available through secondary sources, and usually most of the subsegments. And even if they aren't, there's a pretty cost-effective way through primary research to quantify it. But to quantify the interest in your offering, you're definitely going to need to do primary research. So why do you want to quantify your offering? So from your SAM, you've identified your best target consumer or customer. The critical thing is to recruit a statistically significant sample size of that customer, so that you've got a quantifiable definition of your offering as opposed to a qualified definition of your offering, meaning don't just do focus groups and get qualitative responses from maybe 10 to 12 respondents. At best, that's directional. What you really want to do is quantify your offering. And the way you can do that is a number of different ways to sort of present your product or service. You can use what we call flat concept copy, which is just copies and visuals. Or you could do a short video. But basically, you need to convey to your target customer, what is your benefit? What's the reasons to believe that benefit? And what's your pricing? And probably, if need be, where you can purchase this or how you can find out about this. But most importantly, it's the benefits and the reasons to believe. And the biggest challenge in marketing today, absolutely, is relevant differentiation to your target. You can't just be relevant but not be different, or you can't just be relevant but not different, because then you're the same. And you could be relevant, but if you're not differentiated, then you're commodity. So you really got to be something that they're interested in and that is unique. So once you put this concept in front of your target customer, you've got a number of questions you can ask them, and in doing so, you can get a number of inputs to your market size, to the need for to the amount of capital you'll need, et cetera. So you ask them about appeal. Do you like this? Is it unique? Would you buy it? How often would you buy it? Why would you buy it? But as importantly is you also have to ask why they wouldn't. So these measures of appeal, uniqueness, and purchase intent are quantifiable and benchmarked typically. Conversely, so is the lack of appeal. So if you find out that there's something wrong, or there is that some product is not unique enough, or there's not enough purchase intent, you can ask subset questions as to the whys. Once you've gathered this, you know who's most interested. You can profile those who are most interested, and more importantly, who isn't. You can quantify how many of them there are, how often they buy, at what price point, and more importantly, their source of volume. So that target audience is probably purchasing something that is competitive to this right now. And what will they walk away from to come to your product, and why? And more importantly, if you're not getting sources of volume from other segments, this could give you some insight into who else you could be going after with potentially a different benefit or a different reason to believe from this diagnostic. Now, if you don't like the answers, here's your opportunity to optimize and retest if you can. So if you fall down on any of these measures, then you need to sit down and really assess, so what are the implications for my offering? Can I change it to address this or not? And if I can, how long will it take? And what will it take to do that? Conversely, if you are encouraged by these results, then you've got a lot of input to drive your volume, your top line, your profit, your repeat business, your share, your source of volume. And before you know it, by the end of this process, you've quantified your offering's market potential, not just qualitatively, but quantitatively. So what is an example of this? We are currently working with a company that is a topical skin treatment example. And they have already launched, but they still don't really understand their market size or market potential. So they were looking at, for example, of the many skin conditions that they treat, eczema. So they were only looking at the total number of eczema sufferers and saying, well, that's our market. That's everyone that we could be servicing. And that is the total available market. But what they didn't quantify and understand is of people that are suffering from it, how many are actually treating it? Because some do and some don't. And within those that treat, how are they treating it? What are the different means? Topical creams, oral pharmaceutical, and they've got an alternative to those types of things. So when they saw what the treated, the market that was treating eczema versus the total market, it was a significantly different sized market. But more importantly, they needed to understand, was their offering unique enough, relevant enough, and different enough to cause someone to say, I will not use my current treatment and I will move to this new treatment. And so they really needed to understand what was the uniqueness, the purchase intent, but more importantly, how big can their business be? So the biggest question around that is, so I understand now I need to do this homework. I understand the need for sizing the market and the segments and quantifying my offering and its appeal and its potential and its size. How much does it cost? How long is it going to take? Of course, the answer is that it depends. It depends on the market, it depends on the size of the market, it depends on how readily available secondary data is, it depends on the relative size and how hard it is to get certain lists of respondents. But by and large, at the highest end, we're talking about a mid-5-figure cost over a 4 to 6 week period. But more typically, it's probably a $20,000 to $30,000 charge with 4 weeks to do this. And the large driver of the cost of this is getting qualified respondents, because depending upon what those respondents are, could be very expensive or very inexpensive. For example, high net worth individuals, as you can imagine, are very hard research respondents to incentivize and to take any sorts of markets research surveys, just given their time, what their time is worth relative to what you could potentially incentivize them. Whereas other segments of the marketplace are more willing to take a survey. The key also with these surveys is not to make them too egregiously long, certainly not more than 5 or 10 minutes. And in doing so, then you'll have a lot more completes. And again, you can make this a very efficient process. So once you've got this data, you are now armed for a successful raise. You've got market validated, quantifiable data around the total and available market, your offerings top and bottom line, your source of volume, and the purchase frequency. This will better inform not only your total market potential and size, but how much capital you then need to raise in order to achieve this. One of the things that you can ask also or ascertain from this is how quickly you would scale this, your business, by looking at the purchase cycles. If people are buying this product or service every 2 weeks, you can probably scale pretty quickly. But if it's a very concerted purchase that takes a long time, then it's going to take a while. And so you have to weigh that against the burn rate and the invest rate, again, as a key input into the capital need. But in doing this homework, you'll have shown potential investors that you've done your homework, that you've quantified your homework, but more importantly, you've mitigated against the 2 risk factors in failure. And with that, I appreciate the time. And Glenn, welcome any sort of commentary or questions that you may have or may have gotten. And if you'd like, I can stop sharing my screen.
Okay, we're good. Thank you, Fred. Appreciate the time and your expertise and presentation here on the thoughts for sure. You know, it really is about being best prepared, and kind of knowing what you're going to be asked, right? Or at least knowing what the answer is before you go into the meeting, right?
Absolutely.
And the items that you laid out as pertains to total addressable market, and even more importantly, what interests will be in your own product and service, right? Everybody can talk about big picture items and things and large sets, but until you actually hone in on the actual piece that's going to be about you, ultimately that's what it does come down to. What's your experience with the surveying? Again, when you think about primary research, because that does sometimes, certainly you need maybe a little bit longer, approach lane there, because that does take time. Any tips on the surveying side? I know you said keeping it short is important, and you don't want to be.
Yeah, I mean, the nice thing is there are a number of different sort of qualified lists of respondents already that you can sort of rent, if you will, from a number of different providers. So it's not hard once you understand who your potential segments are and some of the key profile measures are to sort of find those lists. And then the survey itself is, you do them overnight, online very quickly. So the data capture is very quick. And the data analysis takes, maybe a few days after that. So that's the other nice thing. Once you've got a data set like that, you can crunch the numbers any way you want to and cut the data in a lot of different ways in terms of which segments like you, which don't, right? Who are more competitive, what are the different, you can play with price points. That's the other thing on different sort of survey methodologies is you can test different price points. You can test different sort of combinations of, reasons to believe or benefits to get to an optimized combination. So that's the magic in this. And but the other part of the magic of this is you've got a data set on the other end that you can use. So if you've got a capital partner that's asking a question you don't have a ready answer to, but you've got it in the data set, you can get back to them the next day with, we've taken your question and queried our data, and this is the quantified answer.
Yeah, a quick turn is important, right? Keeps the conversation going, keeps the dialogue and perhaps and hopefully the confidence as they work through it. It sounds like if this was like a political thing, it's almost like it's a listening tour. It seems like you're getting a lot of feedback along the way, right? As you're talking here and doing and conducting your primary research here as well. In your experience, how often do people take in the feedback? Or do they become a little bit too, oh, no, you don't get it. And maybe then they're not as adaptable as they should be.
Well, I think it's important to be able to read and react to the data you get, right? So if you get some answers that are not what you're looking for or you don't expect, then the question is, how do you act on that? Do you need to offer the product or service, and can you do it? And then go back out and query again. But in terms of just sort of measuring the market and how it moves, that varies. If you look at just how much the MarTech world changes, that changes on a daily basis, right? But if you look at something that's probably slower moving, then you don't need to be, looking at the market as frequently as, So it's just a question of how dynamic the marketplace is that you're in it right now.
From your corporate experience, how was those approach lanes? Were they longer from a reactive time?
Yes, particularly in consumer goods, because it took longer to get to market.
Okay.
You couldn't address your product or service, in real time like you could say in other markets. And so that's why, particularly at the McDonald's of the world, or even some CPG companies, we'd be looking at consumer data, at least the strategic data, not just the day-to-day data, the sales data, a couple of times a year. The consumer markets in those businesses didn't move all that much. The micro markets and some of the promotional activity, of course, you could move, in the case of McDonald's, in hours.
Okay.
But menu items and that type of thing, it takes a while. But the other thing beyond the confounding factor in the corporate world is supply chain. So, to put a new menu item out in 15,000 McDonald's across the country, you got to go all the way to the farm to make sure that you've got enough, in the restaurants for when you launch that.
That's right. You don't want to run out. You'll get unhappy customers at that point.
Exactly.
Well, Fred, it's interesting. You really underscore the importance of data and how empowering it can be. Data then analyzed and researched and reacted to becomes information, and eventually, as you said, it leads to that market raise and helps validate what your valuation can be or may become. And it's really, really important for our audience here today to certainly hear that and understand that. So thank you for joining us today here at Young Entrepreneurs of the World. We appreciate your time and your expertise and your experiences and your very fine presentation today.
Thank you. Have a
All right.
great rest of the conference.
Thank you. We look forward to seeing you next time. Take good care.
All right. Thank you.
Thank you.